There's this weird moment that happens when your net worth hits around $100,000. It's not flashy, no fireworks, nobody hands you a certificate. Your life doesn't suddenly look different on the outside. You still drive the same car, you still check prices at the grocery store, you still hesitate for a half second before ordering guac. But internally, something shifts. Because now, for the first time, money isn't just something you need, it's something you have, something you're responsible for. And that's usually when the questions start creeping in. Should I protect this? Should I grow this? What if I screw this up? What if the dollar collapses? What if the stock market crashes? What if inflation quietly eats this alive while I'm busy living my life? That's usually when gold and silver enter the chat. Not in a dramatic doomsday way, more like late at night, scrolling, watching a video, hearing someone say, "Gold has held value for thousands of years," and feeling something in your chest go, "Yeah, that makes sense." And silver too, cheaper, more accessible, more upside, maybe? And then suddenly you're staring at your net worth, this number you worked years to build, and you're asking a question that feels way bigger than metals. What's the smartest way to protect what I've built without sabotaging my future? I'm Nick, and honestly, I spend way too much time thinking about money, how people make decisions around it, why certain choices feel safe but aren't, and why other choices feel risky but quietly change everything. I've watched people hit $100,000 and immediately get smarter, or immediately get scared, sometimes both. And here's the thing most people don't realize yet. The silver versus gold debate at $100,000 net worth isn't really about metals. It's about psychology. It's about fear versus control. It's about whether you're still building or whether you're already trying to preserve something that isn't done growing yet. By the end of this, you're not just going to know which one makes more sense. You're going to understand why your instinct leans the way it does and how to use that instinct instead of letting it quietly run your financial life. So let's talk, not like experts, like real people trying not to mess this up. Hitting $100,000 does something sneaky to your brain. Before that, money feels fragile, temporary, like it could disappear if you breathe wrong. You're focused on earning, saving, hustling, surviving. Growth is the goal. But at $100,000, now there's something to lose. And the moment there's something to lose, your brain quietly switches modes from offense to defense. You start asking different questions. What if the market crashes? What if inflation spikes? What if I make the wrong move? And here's where gold and silver sneak in wearing the costume of safety. Gold whispers stability, permanence, history, kings, empires, vaults. Silver whispers opportunity, undervaluation, the people's metal, something that hasn't had its moment yet. But what's actually happening is more subtle. At $100,000, you're standing at a fork in the road between builder mindset and protector mindset. Builders focus on increasing future earning power. Protectors focus on defending what exists. Neither is wrong, but choosing the wrong one too early can quietly cap your life. And metals, especially gold, appeal hard to the protector side. Because gold doesn't promise growth, it promises survival. And when you've worked years to get here, survival sounds pretty damn good. The danger isn't buying gold or silver. The danger is letting fear convince you that preservation should now outweigh progress. That's the lens we need to use for the rest of this conversation. Let's strip away the hype and the YouTube thumbnails for a second. Gold is not an investment in the traditional sense. Gold doesn't innovate. Gold doesn't compound. Gold doesn't create cash flow. Gold is a store of value. It's insurance against monetary chaos, currency debasement, and loss of trust in systems. That's not nothing. That matters. But at $100,000 net worth, the real question isn't, is gold valuable? It's, what problem are you trying to solve right now? If the problem is,
I'm afraid of total system collapse, then gold makes emotional sense. If the problem is, I want to maximize my long-term financial trajectory, gold becomes complicated. Here's a personal observation. The people who obsess over gold early tend to be people who felt financial instability deeply, maybe growing up, maybe during a crisis, maybe after watching parents struggle. Gold feels like control, something solid, something that can't be printed or diluted. And honestly, that emotional comfort is real. But comfort has a cost. Every dollar in gold is a dollar not compounding elsewhere. At $100,000 net worth, your most powerful asset isn't diversification, it's time. Gold protects purchasing power over centuries. Stocks build purchasing power over decades. If you're 25, 30, even 40, decades matter more than centuries. Gold is not bad. Gold is just patient. And patience at the wrong stage can look a lot like stagnation.
Silver is seductive. It's cheaper per ounce. It feels accessible. It has this narrative of industrial demand, undervaluation. When it runs, it really runs. Silver feels like gold with upside. And for someone at $100,000 net worth, upside feels necessary. Because, let's be honest, $100,000 is a milestone, but it's not freedom. It's not retirement. It's not do whatever you want money. It's you're on the board now. Silver appeals to the part of your brain that says, okay, but how do I turn this into more? Here's the problem. Silver is wildly volatile. It doesn't just go up. It drops hard. It stagnates for long periods. It messes with your emotions. And emotional investments are dangerous, not because they're wrong, but because they amplify bad timing. People buy silver when it feels cheap. They sell when it feels painful. They swear they're long-term until volatility tests that belief. Silver is not a stable store of value. It's a speculative hedge with industrial exposure. That doesn't make it bad, it just makes it psychologically taxing. At $100,000 net worth, your biggest enemy isn't inflation or market crashes. It's panic decisions made during uncertainty. Silver increases the odds of those moments. Nobody talks about this enough. When you buy gold or silver, especially physical, you're not just buying the metal. You're buying premiums, storage concerns, liquidity friction, spread losses. Those costs matter more when your net worth is smaller. A 10% allocation at $100,000 is $10,000. That $10,000 could grow significantly over 30 years in productive assets, increase future earning power, be deployed during opportunity windows. Instead, it sits, safely, quietly, doing its job. But insurance has a premium, and the younger and earlier you are, the more expensive that premium becomes in terms of opportunity cost. This is where people get uncomfortable, because emotionally, metals feel responsible, but mathematically, over long periods, they underperform productive assets. So the real trade-off isn't gold versus silver. It's security now versus flexibility later.
Here's the uncomfortable truth. People who choose gold at $100,000 are usually optimizing for fear reduction. People who choose silver are usually optimizing for hope. Gold says, I want to make sure I don't lose. Silver says, I want to make sure I don't miss out. Both impulses are human. Both can be dangerous if they dominate your strategy. Fear can freeze growth. Hope can fuel recklessness. The smartest move is acknowledging which emotion is driving you, and then dialing it back. Not eliminating it, just turning the volume down. Here's the grounded, boring, deeply effective answer. At $100,000 net worth,
Gold should be a small stabilizer, not a centerpiece. Silver should be minimal or symbolic, not aspirational. Think 2 to 5% for gold if it helps you sleep better. Think silver as optional, only if you understand volatility and can emotionally detach. Metals should support your strategy, not define it. Your real focus should still be increasing income, growing productive assets, expanding optionality. Gold and silver are seasoning, not the meal. There is a point where this flips. At higher net worth levels, 500K, 1 million plus, preservation starts to matter more. At that stage, metals protect accumulated purchasing power. But at $100,000, you're still climbing, and climbers shouldn't anchor themselves too early.
If you're sitting around $100,000 net worth, feeling torn between gold and silver, here's what I want you to hear. Quietly, without hype. The fact that you're even thinking about this means you're doing something right. You're aware, you're intentional, you're not sleepwalking through your finances. That matters more than whether you choose gold or silver. But don't confuse feeling responsible with being effective. Gold won't make you rich. Silver won't save you from bad decisions. They're tools, not solutions. At this stage of life, your greatest asset isn't metal, it's momentum. It's your ability to take calculated risks, recover from mistakes, and let time do the heavy lifting. Use gold if it calms your nerves, but don't let it slow your stride. Be cautious with silver, not because it's bad, but because excitement can quietly turn into distraction. And above all, remember this. The goal isn't to protect $100,000 forever. The goal is to turn $100,000 into a life with options, freedom, and resilience. And that happens through growth first, protection later. You're early, you're capable, you're not late to anything. Just don't let fear dress itself up as wisdom and steal years you can't get back. And one last thing, because this part tends to get lost in all the charts and debates and price targets. Money decisions at this level aren't just financial, they're identity decisions. Buying gold or silver is often a way of saying, I'm the kind of person who thinks ahead. I'm not naive, I'm prepared. And that's not a bad instinct at all. Just make sure that identity doesn't quietly lock you into playing defense for the rest of your life. Prepared people still take risks. They just take the right ones at the right time for the right reasons. If you ever catch yourself obsessing over metals prices day to day, refreshing charts, watching predictions, feeling that knot in your stomach when silver dips or gold stalls, that's a signal, not about the market, but about you. It usually means the allocation is too big for where you are emotionally, not just financially. Peace of mind isn't about owning the correct asset. It's about owning assets that let you live your life without constantly checking over your shoulder. So if you're at $100,000 right now, standing at that strange, quiet checkpoint between survival and strategy, take a breath. You don't need to solve everything today. You don't need the perfect hedge. You just need to keep moving forward with clarity instead of fear. Gold and silver will still be there later. What won't be there later is this exact moment, this early chapter where growth is still the main character of your story. Protect that chapter. It matters more than you think. We'll talk again soon.